Let's complete the question based on reducing balance method. On 1st Jan 2005, machinery at cost 200,000, and on the same date machinery provision for depreciation 15,000, and at the end of the year you had been requested to calculate depreciation using reducing balance method. Level 1. Identify the type of non-current asset in the above example. So you can clearly see that the non-current asset in the above example is machinery. For this you get 1 mark. Identify the cost of machinery. What is the cost of the machinery? It's 200,000. So you gain 1 mark over there. Which method of depreciation is used in the above example? Which method did they use? We learned 2 types of depreciation. One is calculating using straight line method and another one is reducing or diminishing balance method. So you can provide your answer. Calculate depreciation using the above formula. Since it's reducing balance method, first you take the cost, which is 200,000. Then you deduct any opening depreciation. Opening depreciation is 15,000. Now you take the difference to find the net book value. Then you calculate the percentage. So take some time to calculate the net book value. Therefore 200,000 take away 15,000 gives you 185,000 into 10 over 100. Therefore, the answer for this would be 18,500, and you get 2 marks there for finding the net book value and for the correct answer. Identify the double entry of provision for depreciation. So what's the double entry for provision for depreciation? We have learned in the last class. So take few minutes to think. So the double entry is you debit income statement and you credit according to the example it's machinery provision for depreciation account. Now we are done with this. Now we are going to move to level 4. Which side will you post the opening balance of depreciation to machinery provision for depreciation account? Which side? You enter it in the credit side because provisions have a credit balance. Post the opening balance of depreciation to the machinery provision for depreciation. Now go back to the question and it says 15,000 is your opening balance. Right. So 15,000 is your opening balance. 1st of Jan 2005, balance brought down. Next, post the opening balance of depreciation and post the current year depreciation. Well, let's resolve this. 15,000 was the opening balance brought down. 1st of Jan 2005, 31st 12 2005, income statement expense. Now where are you going to derive this information from? From here, this 18,500. Now let's balance it. Therefore 0, 0, 5, 13, remainder 1, 33,500. Right? You're just supposed to post. Once you're done posting, move to the next step. Again, you write the balance brought down, enter 15,000, 31st 12 2005, income statement expense, and how much? 18,500. Now it's time for us to balance. Now let's balance off the account. I'm just moving back to explain you how to balance the account. As you can see, the credit side is greater. Bring down the balance and then write it over here. Take away 0 on the debit side gives the same answer. Balance carried down. End of year date. Bring it down to the next date, 1st 2006. Balance brought down and 35,500. Now let's post this to the income statement. Now you can see motor vehicle depreciation for the current year is 18,500. So let's post 18,500. Now let's show the impact in the statement of financial position. The type of NCA is motor vehicle, and the cost of motor vehicle 200,000, and the total depreciation that we had calculated is therefore you're going to enter 33,500 here. Therefore 200,000 take away 33,500. 005, 10 take away 3 7, and then 9 take away 3 6. So 167,500.